Hello, everyone. We're back with our morning analysis session today, July 26th. Yesterday, we analyzed together that BTC closed with a red candle showing quite strong momentum, and we expected BTC to continue dropping to a deeper zone. That is the 63,000 and 62,000 zone. But before it goes down, there will be a rebound upward. In yesterday's video, we analyzed that BTC would rebound to the 64,500 to 65,000 zone. That's the area where we expect to be able to consider shorting, right? And currently, BTC has reached 64,500 and we're waiting for one more zone, which is 65,000. So in yesterday's video, we analyzed that from 64,500 to 65,000, we should see if we can open a short position. When we look back at this morning, BTC closed with a bullish green candle, but the trading momentum was actually quite weak and rather small. This is most likely because it's Saturday and Sunday, the weekend, so the price movement isn't strong. And looking at today's candle closing like this, it's a green candle with rather weak momentum, so the probability that BTC will continue to rise to around 65,000 is there. And it could also continue to go down. So how should we view things this morning? Every morning, we open up the BTC chart. We look closely at the current BTC trend, meaning we analyze what the direction for that day will be, deciding whether we should go long or short. And why should we go long or short? If we go long, at which point should we enter? If we go short, at which point should we enter? I'll explain the reasons to you. If we go long or short, at which point should we take profit and why? At which point should we cut our losses and why? So this morning, looking at this chart and today's candlestick, what do we see about BTC's current situation? Should we go long or short, and what will the next trend be? Let's start the analysis. Here we can see that BTC is still showing a double top pattern on the daily candlestick chart. And before that, we saw three red candlesticks with very strong selling pressure and long candle bodies, indicating that the selling momentum was quite strong, pushing the price down to the $63,700 area. And yesterday, it closed with a candlestick, which was also a very strong red candle. And today we see a green candle closing, but it's a rather weak green candle with no strong momentum. So for today, we need to carefully analyze and determine whether the prevailing market trend is long or short, and exactly why that is. Looking at it here, we can't really tell whether it's time to go long or short right now. Let's switch over to the H4 time frame to see how the analysis looks there. On the H4 chart, you can see it's still in a structure of higher highs and higher lows. As I analyzed in yesterday's video, the area where we would expect to short, that is yesterday, I discussed with the members in the analysis study group or the Levantruong crypto membership channel. So we will continue to open short positions, and our short entries will be in the 64,500 to 65,000 zone. As of this morning, our outlook still hasn't changed. Most likely, as you can see here, when we draw a support zone across this bottom, here. When we draw it across, this is one peak, this is the second and the third. This is a false breakout. This is the fourth peak. This is a bottom. So in this 64,800 to 65,000 zone, that's what we call its resistance area. And I think it's quite a strong resistance. And if BTC continues to follow the structure of higher highs and higher lows, it will have to break through this 64,800 to 65,000 zone. But will it be able to break through? In my opinion, the probability of a breakout is not high. The probability is not high. And we can see the USDTD at this 8.4% zone. Yesterday, I analyzed with everyone that the 8.4% zone is also a very strong support area. And of course, yesterday, USDTD was at this 8.5% zone, and I said it would drop to 8.4%. And when it reaches 8.4%, BTC will rise to the 64,500 to 65,000 zone. So right now, it is moving back to retest this 8.4% zone. And with this 8.4% zone, we need to keep an eye on it, which means that BTC in the 64,800 to 65,000 zone needs to break through. It has to break through. But here we can see that there are a lot of tops forming on the H4 time frame, and on this USDT by D chart, there are also quite a few bottoms on H4, so the probability of breaking through is not high. If it can't break through, then it will retest this zone and continue to move up when a reversal candlestick pattern forms. So for this morning's outlook, we have to wait. Wait for what? Wait for USDTD to return to 8.4%, or wait for BTC to move up to the 64.8 thousand to 65,000 zone. If this zone can't be broken and the reversal candlestick pattern forms, for example, when BTC moves up to the 64.8 thousand to 65,000 area, then we check again on the H1 candle. Here. If it gets up here but can't break through and forms a reversal candlestick pattern, you need to understand what a reversal candlestick pattern is. A reversal candlestick pattern is, for example, like these candles here, a very strong wick followed by a bearish engulfing candle. Here, or a very strong hammer candle dropping down, followed by a confirmation bearish candle. That's it. So the types of reversal candlestick patterns include pin bars, dragonfly doji, hammer candles, bullish engulfing, bearish engulfing, and many other patterns. And when it reaches the 64,800 to 65,000 zone, if it cannot break through, it will continue to form a structure on the H1 time frame with lower highs and lower lows. Here's a high, here's a low, here's another high, and the low is somewhere around here. At this point, we'll observe this area. If this morning it goes up to the 64,800 to 65,000 zone and can't break through, then it will form a reversal candlestick pattern to continue going down like this, and we'll open a short position. At that time, we'll open a short position somewhere around 65,000. What could it be? It could go up, sweep above here, and create a wick to the 65,000 area. Its resistance zone is 64,700 to 64,800. If it does, it could totally go up and make a wick to sweep liquidity around the 65,000 zone. And just like here, it wicks to sweep liquidity, then drops back down. It still follows a structure of lower highs and lower lows of a 1-to-1. And now we will observe BTC at 64,800 and 65,000. If it can't break upwards and forms a reversal candlestick pattern like this, then we will open a short position and the next take profit will be somewhere around 63,000 or 63,200. Because on the H1 time frame, it still follows the structure of lower highs and lower lows. The high could be here around the 64,800 area, and the low could be somewhere between 63,200 and 63,000. At that point, if it can't break through here, this is where we will open a short position. And where do we set the stop loss? We will set it a bit above, around 65,200 to 65,300. That zone is relatively safe. Its resistance is at 64,800. So it has to push up to around 65,000 before it drops back down again. So the level where we have to set our stop loss is around this low 65,200 or 65,300. Yeah, because it's relatively safe. If it pushes up to 65,200 or 65,300, it will break through this area. But if it goes up to 65,000, it can easily wick up and pull back to sweep liquidity. So we'll set our stop loss around 65,200. And if we take profit, where should we set it? If we manage to short here, we should take profit in the 63,200 to 63,500 zone. That's the area where it will likely form the next bottom. Because if the structure really is lower highs and lower lows, then this is the peak. This area from 65,400 to 65,800 is the peak zone. And its bottom should be somewhere down here from 63,200 to 63,500. That's the area where it will form the next bottom. Then if it comes back and still follows the lower highs and lower low structure on the H1, Then in the 63,200 to 63,500 area is its bottom. And the next peak will retrace up to somewhere around 64,000 to 64,200. Then it will continue to form a lower bottom down to the 63,000 area. Guys, please pay attention to this point. So this morning, let's see if BTC can be shorted or not. Yesterday, I suggested everyone look for short opportunities, shorting in the 64,500 to 65,000 area. So this morning, we continue to have a view that we can short if it doesn't break through the 64,800 to 65,000 area. Only then should we short. When it reaches the 64,800 to 65,000 level, it needs to form a reversal candlestick pattern. What does a reversal candlestick pattern indicate? It shows the selling side continues to gain strength. If they keep getting stronger, buyers won't have the upper hand, and sellers will push BTC down to the 63,200 to 63,500 range, continuing a lower highs and lower lows structure. But note that on the H4 time frame is forming a higher highs and higher lows pattern. If it moves up to the 64,800 to 65,000 zone and breaks through, then BTC will continue to form its higher highs and higher lows pattern, with the next low being here and the next high needing to reach 68,000. If it can break through the 65,000 zone, then we'll see BTC move up somewhere around 68,000. That means it's still forming its higher highs and higher lows structure. So the next high will be somewhere around 68,000 and its low should be right here. So right here, it has already formed the bottom and continues to move up, creating its peak in the 67,500 to 68,000 zone. Yeah, so its structure on the H4 time frame is still an uptrend with higher highs and higher lows. On the H1 time frame, we're seeing a structure of lower highs and lower lows, so we need to watch this area closely. If it doesn't break through the 64,800 to 65,000 zone, we only short when a reversal candlestick pattern forms. These are both reversal candlestick patterns. Only then do we short. But if it breaks through, we will open a long position when a reversal pattern forms. For example, when BTC breaks 65,000, it moves up to around 65,300 to 65,500. At that point, we don't rush to FOMO into a long position. Instead, we wait for it to return to 64,800 and form a reversal candlestick pattern right at the 64,800 zone. Then we open a long position. So where do we set our stop loss then? At that point, we will set our stop loss right here at this bottom area. That's the 64,300 zone. If we go long, it'll be somewhere around 64,800. If it breaks this area and goes straight up to 65,500, then we must wait for a retest of 64,800 and a reversal candlestick pattern. This is a reversal candlestick pattern, specifically a bullish engulfing. When price drops back and holds above this level without breaking, it forms this bullish engulfing pattern. After that, it wicks down and then continues to go up. Usually, when engulfing patterns form, it often creates a candle that moves back to the support or resistance zone. With a bullish engulfing pattern, a wick often returns to the support zone, testing the candle's middle or even the entire candle. That is the point where we enter the trade. And what about this area? In this area, we need to observe. If this zone breaks above 65 or 65.5, then we will wait for a retest at 64 and see if a reversal candlestick pattern forms. If it is confirmed that the buyers continue to dominate, then we will open a long position, and at that point, we will set the stop loss at this lower area, 64.3. If the take profit for the long order, it will be at 67.5 to 68 because it will continue to follow the structure of higher highs and higher lows on the H4 time frame. So this morning, whether we go long or short, we still have to wait and see how the price behaves around the 64.8 and 65 levels. If it breaks above, then we will continue to go long and look for a long candlestick pattern. If it fails to break above, then we will open a short position and set the stop loss above that level. That is my analysis of BTC for this morning. If you find this helpful, please follow my channel and click the notification bell to receive new videos every day. Please give me a like. Thank you, everyone.